Hello everyone. Hello. Welcome to my live stream. I apologize for being late. What are we talking about today? Well, fundamentally, we're talking about money flow. We're talking about prosperity. We're talking about economic booms. We're talking about economic recessions. But my ultimate goal for all of you is to basically have prosperity, generational prosperity, to be able to build generational wealth. And my goal is to challenge how you think, your decision-making skills, and the actions you take in regards to money so that you are able to fare better in regards to this money game. So I'm going to emphasize, I challenge how you think, I ask difficult questions, and I actually hold you guys to a very high regard and a high standard. So please do not take me challenging how you think and how you move as disrespect. I am challenging you because you can do better, you can have better, and you can do it in a much easier way. Okay, so I want to state that for the record. Next, I do have a moderator. Okay, my moderator actually plans my live stream. So the reason why I'm like 3 minutes late today is because I was going through my talking points before I actually speak with all of you. So why am I telling you that my mod plans my live stream? I'm telling you that so that you understand if you get muted, please know there's no disrespect. We want you to focus. We want you to be here, but we want you to focus because we cannot have separate conversations happening in my live stream while I'm talking about critical topics. Next, if you get blocked, it's because you're not engaging in value-adding activity and you are distracting the audience from listening to me. So if you don't want to get blocked, all you have to do is sit back and chill, tap the screen. If you're having a hard time keeping up with me, I understand this is not entertainment. This is informational, educational. So if you're having a hard time understanding me, just sit back, listen, absorb as much as you can, and tap the screen. Next, I'm a demanding woman. I have some very intriguing information, some very insightful information, and I come from a very revolutionary out-of-the-box approach. So what I'm asking for you is just to tap the screen and answer my questions when I ask and just focus really, really intently. My goal for you is to have prosperity by understanding history. Fanta, I recognize you, Fanta. Fanta, you are going to be muted. Fanta, I recognize you. I remember you. You're going to be muted and or blocked. I'm not even indulging with you. My ultimate goal is that you have generational prosperity so that you can pass on to your family how to ride economic booms so you can actually have generational wealth and keep your money. Next, do not ask me what to do with your cash, because the ultimate goal is for me to teach you how to think for yourself. If you ask me what to do with your money, you're going to get blocked. If you tell me how much money you've made, you're going to get blocked because this live stream is bigger than you. And there's people who need to benefit from what I'm talking about, and your self-serving interests, there's no space for you. All right. Now, if we understand each other, you're already tapping the screen. Let's get started. We are talking about alphabet. Does anyone know what alphabet is? I'm going to repeat. I'm starting off my live stream talking about alphabet. Does anyone know what alphabet is? And I'm not talking about A, B, C, D, E, F, G. Do you know what alphabet is? Somebody's here. I'm talking about alphabet. Who is alphabet? What is alphabet? And do not tell me about the soup or the letters. You will get blocked if you play with me. Does anyone know what alphabet is? No? Come on, there has to be someone in here. Alphabet. All right, let me help you. Google. Do you know Google? If you know Google, let me know. Tap that screen and give me Google. I'm talking about Google. Alphabet is the parent company of Google. Y'all know Google? Yes, thank you. I'm talking about Google, okay? Now, Google. Alphabet is the parent company of Google. Alphabet has bought back 70 billion shares of Google stock. I want y'all.
$7 billion.
7 billion?
70 billion.
Yeah, 70 billion. So I want to repeat. Alphabet, which is the mommy daddy, the parent of Google, parent company of Google, has reached into their bank accounts and paid $70 billion for Google shares of stock. So what am I saying to you? I'm telling you, it's like you having a mother or father, and you go to your mommy or daddy and you ask mommy or daddy for money to save you. When you have a parent who goes into their wallet and pays for something for you, you must understand that that actually means that there's an issue for Google to actually be spending, or Alphabet to actually be spending money on Google. Are you with me? Please let me know if you're with me. I'm telling you, Alphabet has bought 70 billion shares of Google stock. So for those of you who like to trade and you see Google stock going up, I just told you one of the investors of Google stock is Alphabet. So if you understand what the stock market's about, you understand the premise of the stock market. A company is not supposed to be buying its own shares. Are you with me? When shares are bought and it goes up, parent company of Google purchased 70 billion of stock. Yes, Nancy, that's correct. So you're watching a stock go up, not because of research and development, not because of technological innovations, not because it's highly competitive and its algorithm has been improved. I'm telling you, Google stock has gone up because mommy, daddy, Alphabet has bought 70 billion worth of shares. Now, for some of y'all sitting in my live stream, because y'all like to buy low, you like to buy it low because you think you're getting a great deal. If a parent company has to go in and spend $70 billion, what do you think that means for Google? Tell me your thoughts. I'm actually asking you a question. What do you think that means? Do you think it's a good thing? Do you think it's a bad thing? What does it mean when mommy and daddy has to step in and cough up money for one of its children, saving the kids? That's exactly. Now, come on, guys, keep up with me. You stop tapping that screen. Are you having a hard time imagining that Google needs to be saved? I'm sorry. I told you, I'm going to push you. I'm here to push you. Are you having a hard time reconciling with the fact that Google, the G, okay? It's the G and Fang. It's the OG and Fang. Are you having a hard time fathoming that the G, the gangster, Google, needs help? Because I need you to sit with this. Because if you've never watched my live stream before, I've told you time and time again, I'm going to shock you, I'm going to rock you, and I'm going to make you think. Because if you've been watching me, I've been giving you clear indicators that how the stock market is performing is not a direct reflection of the U.S. economy. I'm going to repeat this. I've told you somewhere, some alien has come down and taken Wall Street. And Wall Street is now operating in isolation from the actual U.S. economy. So now I've given you another example of a stock being pumped, and it's being pumped by mommy and daddy, called Alphabet. Do you actually think that you buying a stock low still makes sense? Please tap. Tap, 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 tap. You can think and tap at the same time. I am building new brain neurons for all of us, okay? We're building new brain cells together because I need you to understand money flow. Money flow. Money flow. Because Alphabet basically took $70 billion out of its savings account. I'm going to make this simple. Alphabet took $70 billion out of its savings account and spent money out of their savings account on Google. Now, Google, does anyone know how Google makes money? Does anyone know how Google makes its money? Come on now. Somebody has to know. Alphabet is the parent of Google. Yes. Tell me, answer my question. Ads. Thank you, Orion. Ads. Okay. So, if Alphabet has to take $70 billion and buy back Google stock, What does that mean? Come on now. We're doing deduction. We're deducing. What does that mean? Google makes money from ads. Alphabet has just spent $70 billion for Google to pump up its stock. What does that mean about Google? Come on now. They're hemorrhaging money. How are they hemorrhaging money? Tell me, what's happening to Google? How are they hemorrhaging money? I've given you clues. Come on, tap. I told you I'm going to challenge you. Welcome to school, guys. I know it's late. How are they losing money? Not enough ads. Thank you, Brooke. Not enough ads money. All right? Now, not enough ads money. Now, why do you think they don't have enough ads money? Let's see if you can take a bigger picture. Let's take a few steps back. Let's take a global look at this situation. What do you think could be a nice contender for why Google is not bringing in the ads money how you would need it in Q2? What's happening? Take a global point of view. Google got sued. Okay, that's one. What else? That's a great point. TikTok. What else? TikTok maybe yet. What else? Good, great answers. All of that is true. All of that's China. Yes. China. Temu. China. Yes. China. Temu and Shein. Temu and Shein account for about 25% of Google's ad revenue. Now, why is it that Temu and Shein would not be spending money on ads? Come on now, tap. I'm pushing y'all. I'm going to push y'all. Why is it that Google is not? We said China. Tariffs. Yes. Thank you. Yes. 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 Tariffs. Now let me connect the dots. What are we saying? China has Temu and Shein. If you've never bought anything from Shein, great company. Okay. Some of you have bought from Temu. Temu and Shein is not paying for advertising dollars or advertising because of tariffs. So these tariffs that are a form of economic, I'm going to call it economic flexing, is actually impacting our tech giants. Now, why am I talking to you about this? I am talking to you about this. Hey, Black, don't push it, Black. Black, you're going to get muted. What did I tell you guys about your self-serving agendas? I told you about your self-serving agendas. Now you cannot speak in my live because we're focusing on money flow and education, and you are trying to play your shit. Don't play games with me. You do it again, you will be blocked. Are we clear? Tap that screen, everyone. I want to make sure you understand me. If you come in my comments with your self-serving agenda instead of learning, okay, vibing with me and challenging our mind, you will get booted out of this live stream. Do we understand each other? Now, why is this important? This is important because these tariffs are actually impacting money flow. And a multitude agree. Yes, you agree or get booted. Hold on. The one, guess what? The one and only, goodbye. You want to protest? You can protest on the outside of my live stream. Goodbye. Anybody else who doesn't want to cooperate? Anyone else who doesn't want to cooperate? Okay? Are we clear? Now, why is this important? This is important because Alphabet just spent $70 billion, and $70 billion would, if a company had a market cap of $70 billion, I want you to imagine this. If a company had a market cap of $70 billion, it would rank 142 on the scales. We have a list of companies with market cap. The amount of money, thank you for the gift, the amount of money that Alphabet has spent for Google is the equivalent of a company having a market cap of $70 billion, and it would rank 142. So you know how you have Aramco, you have Nvidia, you have Tesla, some of them top 10. I'm telling you the amount of money that Alphabet spent on Google stock buyback. That money, if it was a company that had a market cap of $70 billion, it would rank On the world, what?
On the S&P 500.
On the S&P 500, it would rank 142. The S&P 500 is made up of 500 companies. Alphabet has just spent $70 billion, and it would rank, if it was a company, it would rank 142 on the S&P 500. Now, the S&P 500 is a list of 500 stocks, companies. Hello, Nana. The amount of money that Alphabet spent was the equivalent of a company being on the S&P 500, and it would rank 142 out of 500. I want you to sit back and swallow the magnitude of what I'm saying. It didn't spend money that ranks it at 500. It spent so much money that if Alphabet actually started another company with that 70 billion and that company was worth $70 billion, it would rank 142 on the S&P 500. Now, this is the next question I have for you. How much trouble, financial trouble, must Google be in that the parent company would spend that amount of money for a short period of time? It's manipulating ratings. That's correct. People are dropping their Gmail. I'm not dropping my Gmail account. I can tell you that right now. I'm not dropping my Gmail account, but I want to expand your mind. There are things happening financially, money flow things that are happening behind the scenes that if you do not understand, astronomical, exactly, if you do not understand history, business cycles, economic cycles, this information would basically go right past your face. This is money flow leaving Alphabet. Money flow leaving Alphabet. The money flow is going to Google. It is pumping up Google stock. But how long can this last? Goodbye, the one. Hold on. Someone's getting ready to get blocked. Someone's getting ready to get blocked. I want you to witness this. You just got blocked. I told you can't have your side conversations in my live stream. You got to focus, all right? You got to focus. Google, this is a way for you to get a sneak peek insider information to Google. You see, guys, you think you need to see the balance sheets of a company. You think that you need to see their bank account to understand what is happening financially with the company. You do not. All you have to do is look at how they move. Look at the decisions that's being made. Look at what's happening, and you can actually read the money. So when you guys think, oh, where do I get this information from? I look at how the money's moving. I'm looking at how the decisions are being made. I'm looking at the time of when the decision's being made, and I connect all those dots and I come to an opinion. That's how I do it. So Google is one of our tech titans. Google is one of the companies that makes up a good percentage of the market cap in the US and our stock market. So if Google is struggling, Tesla's struggling, Nvidia's struggling, Apple's struggling, tell me what that means to you. Goodbye, DM. Goodbye. Tell me what that means to you. The Mag 7, the Titan 10, okay? The Mag 7 or the Titan 10 accounts for a lot of the wealth in the United States. When you look at it from a stock market perspective, when you look at it from the GDP perspective, the market is skewed towards our tech titans. You know, the top 10, it's skewed towards them. They've been actually carrying the U.S. economy forward. I'm going to repeat this. Since 2004, our tech titans have been actually carrying the U.S. economy. It's been shouldering the economic burden of your prosperity and the prosperity of the United States. If you remove the tech 10, the tech titan, the Titan 10, you remove them from the economy, it actually exposes that we have a lot of other industries that are not innovating, that are not competitive, and that are sitting on their laurels. Please tap the screen and let me know if you understand. If you were to remove our tech from our economy, you have no idea what the U.S. would actually represent financially. You would be shocked at the quality of life. We would possibly be a developing nation. The U.S. would be a developing nation if you took out the tech component, the tech titan, not even the whole tech industry, just the top 10. If you remove the top 10 from the U.S. economy, it would basically take our GDP and GNP and it would crash. It would shrink. Now, why am I telling you this? It is critical for you to understand that the U.S. stock market, the industry, it is not diversified. It is skewed. And when you have a very heavily weighted industry that's carrying other industries, if the tech industry gets handicapped, gets sabotaged, gets crippled, that means the impact to the U.S., the citizens, our GDP and GNP would have a ripple effect that's the equivalent of a financial tsunami, which is financial catastrophe. It is massive. So when you have Alphabet spending $70 billion on Google, you guys are sliding in, okay? You're moonwalking your way into the stock market, okay? You're moonwalking. You're not looking where you're going. You're just moonwalking backwards into the stock market because you have Gen Z financial influencers. You have institutional investors and analysts telling you to have hope and invest because the stock market's on sale. I'm going to say this again. On April 14th, there was 3 death cross signals that happened in the stock market on the S&P 500. 3.
Dow, Tesla, and NASDAQ.
Dow, Tesla, and NASDAQ. In the month of April right now, this is 2025, on April 14th, there were 3 death cross signals that happened on the same day. A death cross signal means sell. It is a technical symbol to sell. Some of y'all said, black woman doesn't know what she's talking about. Fine, cool. Here we go again. Alphabet has just spent $70 billion to save Google's stock valuation price. Do I still look foolish? Do I still look foolish? Do I still look foolish? Do you actually think that the stock market is going to give you that double booty bounce? Yes, you want that double bottom. Do you actually think the stock market is going to give you that double booty bounce, which is a double bottom? Do you see it? Because if you see it, I'm telling you, Merlin has come back from history and cast a spell. Merlin, the great wizard, has come in the middle of the night like a goddamn tooth fairy and cast a spell on you. So when I ask you to think, you got to think. You can't see what you want to see in regards to money flow. These were the ones sold out to the executive branch. Google, is there an end game? The end game, the end game is understanding money flow. Fundamentally, you see companies rise and you see companies fall. And when you understand money flow, economic cycles and economic booms, you understand the game is basically to hop onto the next economic boom. That's what you do. You don't cry over spilled milk. Google had great days. Google may still have great days. But from what I'm looking at, when Alphabet has to come in and spend $70 billion to purchase, to do a stock buyback, I don't know. Is it over for Google? I don't know. Will Google re-innovate? Go into research and development? Will Google pivot? It's up to Google. But what I'm telling you is that you must master the skills of money flow and economic booms. Money does not disappear. Money moves. And what you're witnessing is that money is moving away from Google. Now, where is it going? I don't know. Maybe I'll see. Maybe I'll let you know. But what you must understand is that when a company does a $70 billion buyback, that does not mean that Google is winning. What Alphabet is doing is Alphabet is adding some type of, is delaying the inevitable. Alphabet is delaying the inevitable. Either Google figures out a way to get under this boulder, this weight that is under, which is the lawsuits that it's dealing with, or it innovates, it pivots, it changes. The Google that you know, it can't stay the Google that has always been. That is what I try to educate you guys about, reinventing yourself and riding an economic boom. To truly ride a new economic boom, you actually have to pivot. You have to reinvent. You have to have new knowledge, new investment in technology. Google has had a great ride, but Google has been sitting on its big behind. Google has been dominating because it came in during a time where there was a tech boom. It has rolled its way into a plateau, a financial plateau. And that is what happens with companies. If you understand business cycles, you have companies that grow and then eventually they get so big they plateau. And when a company that big plateaus, they're not going to see the return on investment. They're not going to see the profits, the quarterly profits that they're accustomed to, because they are at a different stage in this business's life cycle. Does that make sense? Thank you, bro. They have changed. Okay, let me simplify this. As a human being, you are born, you are a baby, you become a toddler, you become a youth, you become a teen, you become a young adult, you become a mature adult. That is the life cycle of humans. Businesses have a life cycle. Did y'all know that? Please tap that screen. Did you know that a business has a life cycle just like humans? Did you know that? Come on now. Where you at? Where you at? They have a life cycle. So when I talk to you about economic cycles and I talk to you about history, when you pay attention to a life cycle of a business, you can see where it is. So if Google is at the point of its life cycle where it's matured, there's no other place for Google to go. Google has to completely reinvent itself. It has to shed the overhead. It has to shed so much to begin anew. So you are actually watching a company that is worth billions, if not trillions of dollars. You are watching it actually have diminishing returns because it has met its peak. And Alphabet cannot pump or manipulate the market enough to hide the fact that Google is a mature company. It has reached its peak. And unless it sheds what all this unnecessary stuff, unless it starts shedding aspects of its business that is costing too much, that adds no value, you're going to watch their decline. You're going to watch their decline. Either Google has to, like a phoenix, it has to shed parts of its business that do not innovate, that's not bringing in revenue, that costs too much money, or you're going to watch, you're going to witness, you're going to mourn the financial impact of Google. Are you with me? I'm just getting started. I'm just getting started. Now, why am I talking to you about this? Because I want you to understand what you're witnessing. I miss why Temu and Shein don't need ads. Bo, I didn't say Temu and Shein did not need ads. What I said is Temu and Shein is not investing money in ads because of tariffs. Bo, please let me know if you heard me. I didn't say Temu and Shein don't need ads. What I said is Temu and Shein is not spending money on ads because of the high extortionist tariffs. Let me know if you heard me. You got to listen to me, guys. You got to pay really close attention to what I'm saying. Okay? Let me know if you heard me. There's a difference between not needing ads and choosing not to spend money on ads because you're not going to get the sales or the returns that you want. Thank you, Bo, because the tariffs are going to eat into the profits of Temu and Shein. Temu and Shein offers for the price, it offers a quality product. I'm going to repeat. Shein offers a quality product according to the price. If Shein has a low profit margin, Shein doesn't make a lot of money. It doesn't make sense for Shein to spend money on ads. And you know Google ads cost a lot of money. It doesn't make sense for China or Shein or Temu to spend money on ads when the tariffs are going to put them in the hole. It's better for Temu and Shein to either sit on their inventory or find someone else, another country to sell it to, because the tariffs have made it economically unreasonable and not feasible to even spend money on marketing or advertising. It's about profits. We can't stand you. That brings me great pleasure. Thank you. I don't want you to like me, but you will respect me. Goodbye. I don't give a damn if you don't like me, but you will respect me. Now, bye-bye. Okay? Now, here's the thing. Google stock has been steadily declining, and it's declined by 23%. Google stock has been declining. It's been in a steady decline, and it's totaled about 23%. Now, if you know the value of Google stock, that's a lot of money. That's like 25%. Imagine if someone came in and took 25% of your bank account. You would have 2 chickens and a cow. Hi, Keith. If someone came into your bank account, hi, Tracy, and took 25% of your money, you would actually have 2 chickens and a cow, and you would be flying over the moon. So when I'm telling you the amount of money that Google's been losing, you must understand, Google's losing, the U.S. economy is losing. Google is losing, the U.S. economy is losing. I'm going to say it again. Google's losing, lost 25%, about 25%. The U.S. economy is losing a lot of money. It's shrinking, like a dried up teat. It's like a prune or a raisin or a date. It's drying up. That is not the direction we want to go. Now, a similar strategy has actually been used by General Motors. Do y'all know the history of General Motors? Our great GM, a total of 11 trillion losses with the recent tariff. Did y'all hear that? 11 trillion. We didn't say millions. We didn't say billions. Quantum just told you 11 trillion. I need you to chew on that before I go forward. I need you to sit with that ish. Not millions, not billions, trillions of dollars. You are watching a mass money exodus. Am I divorced? You are blocked. Bye-bye. You are watching a money flow exodus out of the United States. And all of this is being exposed. Partly because of the tariffs. The tariffs that the Trump administration have put in place is actually exposing the lack of competitiveness and innovation that the U.S. economy has been having. What I'm trying to tell you that the tech industry has been covering up for lack of ideas, innovation, research, and development. And the U.S. economy needs ideas, innovation, technology for it to continue to be an economic superpower. So if the tech industry has been covering up, if the tech industry has been covering up for other industries not pushing with research and development, process efficiencies, new ways. I don't care what industry you're talking about. It could be the real estate industry. It could be the banking industry. The tech industry has been covering up for the fact that a number of industries in the U.S., they do not understand the fundamental principle of capitalism, which is competitiveness and innovation and ideas. That is what made the U.S. an economic powerhouse. It wasn't manufacturing. It just happened to be manufacturing at a point in time in history. The U.S. economy is known for innovation. And I'm telling you, bold face, thank you for the gift, bold face, that other industries have not been innovating. And because of these tariffs and the timing, you are witnessing a massive GNP cover up that's been happening for a few generations. Are you with me? Are you with me? We have been financially riding the coattails or the effects of innovations that happened generations ago. I'm going to repeat this. Your prosperity you've been experiencing, it is not because we've been innovating. It is because we're still riding the benefits of prior economic booms. And when economic booms dry up, and there's not as many economic booms that we need to support the financial success that you're accustomed to, you're going to witness a shrinking of the economy. That's the form of a Great Depression. So when I tell you, you need to innovate, you need to reinvent yourself, you need to follow money flow, and you have to constantly reskill and have tools and technology on your side. That is the law of the money jungle. The money jungle requires you to adapt. And as a human being, that means you must adapt your knowledge and the tools or technology you need to have prosperity. Not just prosperity for a short period of time, continuous prosperity. Are you with me? Because you guys have stopped typing that screen. You stopped tapping the screen. Tap, 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 tap. I told you I'm just getting started. I'm not even done. Now let's get back to General Motors. You know what happened to General Motors, right? You know the story of General Motors, right? General Motors, had a great period. And then General Motors plateaued. Why? Because General Motors met its time in the life cycle of a business where it basically stopped being a growth, and it just sits there. It just sits there. Why? Because it is not innovating, and it has so much overhead and so much unnecessary processes are not streamlined. GM and Ford, exactly. They went through a major growth period. And then if you understand economic cycles, you understand you grow, and then you peak. So GM and Ford actually peaked. But when they peaked, instead of shedding and reinventing, they liked being that money powerhouse. That they like that. When a company gets to a certain stage where they're powerful, they're rich, and they're renowned, they don't understand that there's a cost to sitting on top of the mountain of the throne. And when you sit there and you stop pushing innovation, and you get used to being inefficient and having wasting money, then someone else comes along and knocks you off of that. So let me tell you what happened. General Motors in 2023 used a very similar strategy that Alphabet's using with Google. I'm telling you, General Motors in 2023, General Motors executives could not convince investors that the company was stable. Hold on. I'm getting ready to blow your mind. I'm going to backtrack a little bit for you. I'm telling you, in 2023, GM used a very similar strategy to what Alphabet did with Google. GM used this strategy because the executives of General Motors could not convince investors that the company was stable. Listen to me. GM bought back its stock, some of its stock, because the executives of GM could not convince investors that the company is stable. What am I telling you about Google? Connect the dots. No company goes into their savings, their retained earnings, to buy back stock of such a magnitude unless what? I just connected the dots. Okay? What am I telling you about Google? What am I telling you about Google? GM did the same thing. GM bought back stock because it could not convince its investors that GM was stable. Do you recall the decline of GM? GM declined. Yeah, you with me, right? Okay, now I'm talking to you about Google. I'm talking to you about Google. I need you to sit with this and tap the screen. I know it's shocking. How? You're asking, how did Google get into this predicament? Well, I would say it's arrogance, complacency, and entitlement. Sounds like human traits, right? Complacency, entitlement, and sitting on, that's what it is. It's no different than a human being. It's no different than a human being. You reach a certain point of success and you just think, you sit there. You go from being a king to Humpty Dumpty on the wall. When you do not keep innovating and you do not shed business units and departments that are not adding value and that are costing you too much money, you get to the point where you go from being a king sitting on his throne or a queen sitting on her throne of wealth to Humpty Dumpty on the wall. Because when you are in a capitalistic society, you have to keep pushing. You cannot get comfortable. You have to adapt because money flow adapts. So now you're seeing proof that when a company, its parent company, has to go into its pockets to buy back its own stock, I'm telling you, unless they pull a rabbit out of the hat and they basically sell off certain business units and change their business model, you're going to watch the financial decline of Google. I'm going to repeat. Google has to pull a Hail Mary, and it has to cut units of its business that are not tied to what brought Google success. What brought Google success? Innovation. So Google, if it wants to stay on the map, stay with this market cap, and continue to compete in a time where money moves like air. You see, you guys don't believe in energy. You don't believe in energy, but let me tell you this. We are in an age of air, and money moves fast. And money moves with companies and people who are intellectual and who's quick. So if Google wants to survive, Google has to shed business units and departments that are costing too much money, that are not adding to research and development innovation. They have to drop that shit. Because if they drop it, they can make it. If they don't drop it and they hold on to the past, you're going to watch Google become Yahoo. You're going to watch Google become AOL. I'm going to let you sit with that. I'm going to let you sit with that. It's like you being in a relationship that's milking you spiritually, mentally, and emotionally and bringing you no money. Do you dump that person or do you keep carrying that person along? What am I trying to tell you? Google needs to cut. Become a lean innovation machine, and then tell you Google needs to cut. Become a lean innovation machine, and then they go back to what brought them success. That is the purpose of a life cycle. You have creation, you have sustain machine, and then they go back to what brought them success. That is the purpose of a life cycle. You have creation, you have sustain, and then you have destruction. They have to destroy parts of their business units in order to create the new desire. If they choose to hold on like GM, you know what happened to GM. GM, they're trying. GM is trying, but GM has not gone back to them. GM, they're trying. GM is trying, but GM has not gone back to its glory days. So what is Google going to do? I don't know. To its glory days. So what is Google going to do? I don't know. Because if Google does what I suggest, they're not going to be liked. But I can tell you this, investors will like them better. I'm going to repeat. If Google does what I'm suggesting, public opinion will not be in Google's corner, but Google will be able to survive. And investors will like them even more. You see, when you find out what you're good at, even as a person, even as a company, or even as a country, when you find out what you're good at, that is like your divine gift. That is what brings you success. When you step away from the system, the roadmap that brought you great success, then you're set up to fall. I'm going to repeat because I'm giving you some spiritual wisdom right now. If you found your gift, your talent, whether it be singing, dancing, cooking, whatever your gift is. When you find your gift, your knack, and you stick to that path, you are more than likely guaranteed success as a person, as a company, and as a country. Google has moved away from its divine success road. And that is why you're witnessing it being pulled apart. You're witnessing lawsuits, and you're witnessing its market cap sliding. If I was Google, I would cut. And I would go back to the basics of what brought me success, and I would ride this next economic wave. That's what I would do. But you need a lot of balls to pull that off. Because if Google actually cuts, it's going to have a huge impact on employment, on the economy. Short term, midterm, long term, ka-ching, 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 ka-ching. That's money. Let me know if you're with me. Please tap that screen and let me know you're with me. It's a different type of live, guy. I know. It's a different type of live stream. Please bear with me. This is a different type of live stream, okay? This is ideas. This is philosophies. I'm pushing your mind because I want y'all to know old money systems, old money constructs are actually being destroyed. I'm going to repeat. If you do not shift with the age, you do not shift with the time, you actually get caught up in a massive economic destruction. It's like being on the Titanic, okay? If you get off the Titanic at the right time and get your wallet and your booty in the life raft, you survived. If you stayed on the Titanic and you know damn well those dinner plates were falling on the floor and you were still popping it, locking it, and dropping it like the ship was not crashing, then what can I say? You missed your window of opportunity to get to another economic boom, and now you're on the side of an economic recession, depression, all because you had bad decision making and poor timing. So what will Google do? Will Alphabet continue to pull out money when it needs that money? Or will it sit down and these executives start making some hard decisions about the longevity and the future of Alphabet and or Google? I'm not a woman that's for popular opinion. I'm a woman that follows money. And when it doesn't make money, it doesn't make sense. These expenses, these expenses that Google has is not going to save its behind. Between the lawsuits and everything else that's happening as far as ad revenue dropping, I don't think that Google can weather the storm unless Google cuts costs severely. That's what has to be done. Okay, just like in your household, if you were losing money, you didn't have a job, and you were living off of your savings, you would have to cut costs. Same notion. The only difference is it's your house versus Google's house, okay? Now, GM bought back $6 billion. Thank you for the gift. GM bought back $6 billion of its stock, and that $6 billion they bought generated $22 billion in revenue. Listen, I got another thing for you. When GM bought back $6 billion of its stock, it pumped up the stock so much that it went up to $22 billion in revenue. Listen to me. When GM in 2023 bought back its stock, it bought back $6 billion of its stock, and it generated $22 billion. So what am I trying to tell you? I am trying to tell you that when GM, parent company, bought back $6 billion of its stock, they were actually able to generate $22 billion in revenue. So what does that mean? It means a parent company, pumped up its own stock, profited from it, and took that money out. I want you to sit with what I'm saying. A company bought back so much stock like it was an institutional investor. It drove its stock price up, and they actually profited. Now, you know that stands against what the stock market's about, right? When a parent company is buying back stock to uphold a stock price, to make it seem like it's more valuable than it's worth, that means normal everyday people like you, either you're getting duped or you get out. But if you don't understand the strategy that's being used, you could possibly get caught up in a financial money flow storm that you don't win. So when you see stock prices going up, you got to ask why. You can't just assume because the market rebounded by 2 to 5% on a Friday, that means that financial disaster is not there. That's why I challenge how you think. So the GM parent company made it seem like GM stock was thriving when they were just pumping up the stock because they were buying such a huge amount. Are y'all understanding me? I'm trying to tell you is that you got to do your research. Yes. You got to question. A parent company buying back stock. No. That means they're not innovating. That means they're not competitive. It means that they're not efficient. I am talking about GM and I'm talking about Google. It means they're not competitive. It means they're not efficient. It means they're not innovating. So even when the stock price goes up, you got to figure out why. Because when people tell you, isn't that against the law?
No.
Did you hear anything in the news about GM breaking the law by buying back its own stock? Buying back your own stock is not insider trading. It's not insider trading. It's a nice loophole. Now, if you fall for it, if you smoke and mirrors, if you fall for it, that's why I have these live streams, because I want you to be able to think. I want you to be able to look at the economy. I want you to look at the global economy. I want you to look at who's buying. If a parent company is buying, you should be asking why, how, what, huh? That's what you should be saying. But some of y'all you're ignoring the technicals. You're ignoring the signs in front of your face. And then you say, oh, I got played. I got scammed. No, you schemed yourself. This is a sign of you scamming and scheming yourself because you are taking an approach of complacency and entitlement. Okay? So what are the consequences? Let me tell you the consequences of what happens when a parent company buys back its stock. Let me tell you the consequences of when a parent company buys back. Google and GM stock equal bad. Who is good? I didn't say that. I said your decision making needs to be better. Let's be clear. Hold on. You can do that. You can do what you. I want to be clear. I didn't say Google stock was bad. I did not say GM stock was bad. What I'm trying to do is help you with your decision making skills so you don't make bad decisions. And I'm using their stories as an example to help you understand and challenge your mind. Do not put words in my mouth, okay? I talk fast, but my brain is faster than my mouth, which means my brain is on light speed. I told you this is about decision-making skills and financial accountability for you to ride economic booms. I did not say Google stock was bad, and I did not say GM stock was bad. What I told you is this is what they're doing, and they're pumping up the stock. Now, if GM is innovating, that's a great thing. If Google is innovating, that's a great thing. Whether it's bad or good, that's your decision. My goal is to get you to hold on to your money, to leverage your money wisely, to keep your money, and have generational prosperity and generational wealth. Are we clear? You got to listen, guys. I know what I said. I mean what I say, and I say what I mean. Now, here, what are the consequences of when a parent company buys back its stock? Okay, here are the consequences of using reserves. There's a reduced financial flexibility. There's an increased debt dependency. There is limited growth opportunities. There is a negative market perception. There are operational risks, meaning there's a potential to not be able to produce the same, and they're vulnerable to economic shocks, which means if the company does not have the reserves, Yes, I'm trying to make you think. If the company doesn't have the reserves, because Alphabet just coughed up $70 billion, that means they're more vulnerable or susceptible to the Trump administration's tariffs or whatever else that's happening, a recession, regulatory changes, or even industry-specific challenges. So on one hand, you think, wow, GM made billions of dollars in profit. You think, wow, Alphabet made billions of dollars in profits. There's a price tag to this. Because if any of these things happen, you're going to watch a house of cards come crumbling down. There's a reason why a company has reserves. They have reserves because they understand that business changes, alliances change. There's so many different things that you have to account for when you have a business of that size or any size, and cash is king. So if they're taking cash to buy back 70 billion of Google stock, that means the risk is worth it. Listen to me. Alphabet coughed up $70 billion knowing the risk of spending that money. If they know the risk of spending that money is very risky and they still went ahead and did it, that tells me that Google is in more trouble than you actually think and or see. Let me know if you understand me. Please tap that screen. When a company executives make a decision to cough up that amount of money, knowing that if they don't have those reserves, they're more likely to get impacted by regulatory changes, by recessions. If they're willing to take that risk, then that means over here that saving Google was not saving Google had a higher impact. Okay, this is where, guys, you have to read between the lines and you have to penetrate what's happening. They were willing to take the risk of not having that cash in reserves to buy back Google stock. That means there's more than what you see. There's more than what's in the news. And Google cannot negotiate its way out of whatever the hell is going on inside that company. Does that make sense? I'm just extrapolating. This is what is called logical deduction. All right, now here we go. Use of this strategy points toward a decline of Google, plus it has many legal battles. Google lacks the ability to handle this trade war that's happening right now. Now, Google in Q1 2025, in 2025 Q1, Google's earnings exceeded expectations. But let me tell you about Q1. Q1's in the past. Q1 is in the past. When you make decisions off of what a company did in the past and not considering what's happening in Q2, I'm saying that's not good decision-making skills. Let me tell you good decision-making skills. Google says, look, our Q1 2025 was excellent. And let me tell you that our Q2 is actually on par or performing better than Q1. Then I say good investment. But if they're telling you Google had a great Q1 and their mum is the word about Q2, if I was investing, I would say, you need to show me what you're doing right now. Don't tell me about how hot you were back in the day. Don't tell me about how fine you were back in the day. You're trying to catfish me. Tell me what you're doing right now. Show me how hot you are right now. Show me your revenues right now. Show me your ad revenue right now. Don't tell me about Q1. Q1, the tariffs hadn't fully taken effect. You were still writing off the profits of Q4 of 2024. So when I tell you guys, you got to be able to ask questions and understand. When they start telling you about Q1 and not comparing Q2 to Q1 and letting you know that Q2 is on par or going to surpass Q1, I'm saying, I smell poo-poo. I smell poo-poo. That's bullshit. Y'all disappeared on me again. I did it again. I'm sorry. You're going to have to forgive me. I'm sorry. You're going to have to forgive me. Please tap that screen, though. You're going to have to forgive me and tap that screen. That's how my brain thinks. My brain thinks, oh, that's great. You did well in Q1. That's excellent, Google. Show me what you're doing in Q2. Show me week by week in Q2, how your weekly revenue matches up to Q1. Because if your weekly revenue of Q2 matches the weekly revenue of Q1, then I know that you are on track. But if your Q2 weekly revenue does not match Q1 weekly revenue, I'm going to look at you saying you're trying to play with me, and you don't play with me or my money. That's how you analyze the situation. Stop making decisions about the past. The past is great. The past is great. You know what the past means? The past means that Google was able to make good decisions and generate revenue. You know, people can go cray-cray overnight, right? Do you know that, right? A person can wake up, go to sleep, and wake up on the wrong side of the bed and start making decisions that are part of your financial decline. So just because Q1 looked good, you have to have them compare Q1 against Q2. And if the numbers match, the numbers look similar, then you go ahead. Maybe. But you got to give me the data. You got to give me the answers, okay? Now, reasons why Google's in decline, various legal battles, domestic and international problems, AI. Chatbots are the future. Google is outdated. The algorithm of Google is not on par with TikTok, okay? There is a major revenue loss from China. Shein and Temu account for 21% of Google's ad revenue, okay? Shein and Temu, that is China, accounts for 21% of Google's ad revenue. That's about 25%. That's 25%. You with me? Tap that screen if you understand what I just said. Yeah. Google is being torn apart like a falcon, like an eagle just came. A predatory bird just came and it just clawing at it. And now you understand why Alphabet was motivated to cough up $70 billion, even though it puts the company at a greater risk. So guys, this is the portion of my live stream where I move on to helping you understand that you can actually pay your bills off of a 2-hour workday. So anyone who's interested in a 6-figure income cash flow opportunity that is in a boom, I am confused. Buying back stocks is a common strategy. Keith, my love, you can look that up because I've transitioned. Buying back stocks is a strategy that's used for multiple reasons, but I have moved off of that because I have other things to talk about, Keith. So you're going to have to forgive me, Keith. You've got muted, my friend. I believe, Keith, that you can research this on your own and you can come to your own conclusions. I'm here to stimulate you, titillate you, open your mind, expand your mind, but you got to meet me halfway and you got to do some work on your own. So if anyone who's interested in knowing how a 2-hour workday can pay your bills, set you up for financial success, having automated streams of income in an industry that's booming, and an industry that's a bull, and an industry that's minting cash, please tap that screen and stay with me. Everyone else, this is your time to exit. I will be back again tomorrow. I apologize for being late today. Thank you for following me. Thank you for the love. Thank you for the attention. And thank you for your cooperation. Now, everyone else, what am I talking about? I'm talking about cash, cash, money, money, cash, cash. Cash, cash, money, money, cash, cash. Now, you're saying, how in the hell can I pay my bills off of a 2-hour workday? You're staying in my live right now to see, have I actually got abducted by aliens in front of your face and they did a body snatch? No, it's still me. I'm still here. I've said it before and I'll say it again. Even during an economic recession and financial chaos, there is money to be made if you know where to look and you know where to go. What am I talking to you about? I am talking to you about a done-for-you business that is already set up for your financial success. I'm going to repeat. I'm talking about a done-for-you online business that's already set up and built, that's ready for your 6-figure financial success. What is this? This is using automations. This is using a funnel, and this is an automated business that's already set up. It's plug and play. Now, when you have an automated business, that means you have income on autopilot. What is autopilot income? Autopilot income, there's a puzzle. Hold on. Here we go. Puzzle's gone. Puzzle's gone. Automated income is actually using a system that's being built, and you offer high value digital. I keep getting kicked off. I'm sorry. I hope you don't get kicked off. It's offering high value digital products in which you earn hundreds of dollars of revenue. So if Miss Viola keeps getting kicked off, let me tell you what that means. It means I have outstayed my welcome and it's time for me to go. So I'm going to repeat. Anyone who's interested in how a 2-hour workday can pay your bills offer you 100% profits, and set you up for six-figure financial success, go to my profile. My website is there. This is a very simple thing. It's revolutionary because it uses technology like your cell phone, and it uses technology like innovations. This system is set up to get you on the ground running, to have your business set up within 24 to 72 hours, and it equips you with the information and knowledge you need to work for yourself. It is a done-for-you business. There's no more guesswork. There's no trial and error. There's no failing. There is a roadmap, a blueprint to your financial success, and you do not have to go it alone. It is affordable. It is budget friendly. It is beginner friendly, and it's going to open up a new world to you to ride this digital economic boom. The e-learning industry is a $1.5 billion daily industry. What does that mean? It means $1.5 billion is being earned every single day in the e-learning industry. It is projected to double to $3 billion by 2027. So what does it mean? It means you're saying, where's the money? There's a pool of money right there. The e-learning industry is legit. You have reputable universities that are offering e-learning programs because they're lucrative, they're high value, and there's no cost associated with it. This is beyond ebooks. No. Ebooks doesn't compare to this. I'm talking about a program, a high value program in which one customer, you earn hundreds of dollars off of one customer. So if you have one customer a week, you could be earning $2,400 of extra income a month. It doesn't, even if you have 30 followers, it doesn't matter. You have no followers, you have 30 followers, it doesn't matter. This is an opportunity for you to get taught what you need to know to pay your bills with a 2-hour workday. 100% of the money goes to you, and you get daily payouts. So instead of getting paid every 2 weeks or once a month, you will have a done-for-you online business that's set up for financial success. You avoid the normal hassles, hurdles that entrepreneurs face, and you just follow a proven roadmap, a blueprint, a system that's working for people, that's earning people several $100s, thousands. Go to my stories. I'm sorry, this is what I'm going to do. Anyone who wants more information, this is what you do. You go to my profile. On my profile, you have my website. You also have my stories. Go to my stories. I'm going to end this right now. Go to my profile, my website's there, and watch my stories. One woman earned $50,000 in 1 month. One man earned $5,000 in 1 week. One person earned $600 while they were shopping. Another person earned $900, actually $1,800 within 1 day. E-learning. E-learning is the bomb. Go to my profile. Check out my stories. Go to my website. I'll see you all tomorrow. Check this out. 2-hour workday. Pay your bills. Real. Have a good night. Thank you.